Welcome to another video in the SAP S/4HANA Fixed Assets playlist. In the last video, I explained the difference between intra-company and intercompany fixed asset transfer, and I demonstrated the intra-company asset transfer process on SAP S/4HANA. In the video today, I will start explaining the fixed assets intercompany transfer, and as a reminder, the difference between intra-company and intercompany is when we transfer the asset within the same legal entity or the same company code, then this is intra-company asset transfer. And when we transfer the asset between two different legal entities or two different company codes, then this is called intercompany asset transfer. In the video today, I will explain the fixed asset intercompany transfer process and accounting entries. This will answer questions such as what is the meaning of relationship type, what is the transfer method, what is the transfer variant, and the two different ways available in SAP to handle the intercompany asset transfer process. Before recording this video, in order to review and confirm my information, I reviewed the SAP help website. There is a page explaining a lot of details about the intercompany asset transfer process. It explains the needed configuration, the accounting entries, and it is very useful. And the way I will explain this topic in the videos is actually following the same structure that is available in the help website. So I recommend that you use this video with the SAP help website. So try to read what is there and watch the video. I will explain what is written there, and this will give you very good knowledge about the process. When we process intercompany fixed asset transfer, we are actually moving a fixed asset from one company code to another company code, which is similar to retiring the asset from the sending company code and posting an asset acquisition in the receiving company code. I already explained fixed asset retirement and fixed asset acquisition in the playlist, so this will be very similar. When we do an intercompany asset transfer, we are actually doing both of them together, a retirement and an acquisition. And there are two ways we can do this transaction in SAP. The first one is called the automatic process, and the second is the manual process. In the automatic process, we perform only one transaction code, we post only one transaction, and SAP will automatically post the retirement from the sending company code and the acquisition in the receiving company code. In the manual process, the second way, we have to do each step separately manually. So we will go first to the sending company code and we will post a retirement, and then we go to the receiving company code and we post an acquisition. Which way you want to use depends on your business requirement. So the automatic process requires more configuration because you need to tell SAP what to do automatically. So there are some configuration steps that must be done, and is also not very flexible as the manual process, because when we configure the system to do an automatic thing, we have to stick to a specific process. So for example, in the automatic process, we cannot have accounts payable or accounts receivable invoices, and we cannot have taxes, of course. Since there are no invoices, there are no taxes. So if in your process you want to have accounts payable invoice or accounts receivable invoice as if the first company code is selling the asset to the second company code, which requires invoicing and taxes, then you have to use the manual process. When we use the automatic process, SAP uses the asset retirement against automatic clearing accounts and asset acquisition against automatic clearing accounts. These two processes I already explained. So against automatic clearing accounts means there are no vendors or customers included in the process. If you want to have accounts payable invoices and suppliers, accounts receivable invoices and customers and taxes, then you have to use the manual process. And then the way you will process the transaction is from the sending company code, you will do an asset retirement against a customer with revenue, so an asset sale with customer. And in the receiving company code, you will post an asset acquisition with a supplier, exactly as we did it before separately in the playlist. So in this video and in the videos for the intercompany fixed asset transfer, I will focus on the automatic process, as the manual process is fully explained before. So these videos will only cover the automatic process. I will cover the configuration, I will do a demo on SAP S/4HANA, and will explain the different details in the process. So now for the automatic fixed asset intercompany transfer process, let's have a look into the accounting entries and explore the different details in the process. So let's take an example. We have two company codes, company code AG20 and company code AG30. And these are the actual company codes I will use in my demo on SAP S/4HANA. In AG20, we have a machine, a fixed asset, that has already been depreciated for 1 or 2 years, and we want to transfer this machine from AG20 to AG30. Now let's add some numbers to our example so we can see the actual financial entry in the sending company code. So let's say the asset was acquisitioned for 10,000 USD and the accumulated depreciation balance when we did the transfer is 3,000 USD, and the company code, the receiving company code AJ30 is paying 5,000 USD to buy this asset or to receive this asset. So this is considered as a revenue in the sending company code AJ20. This means the financial entry will be as you see here. The 5,000 revenue is posted against an affiliate company clearing account, and the difference is posted to an asset gain or loss account depending on whether the amount we received is more or less than the net book value of the asset. In our example here, the net book value of the asset is 7,000 and we received only 5,000, so we have 2,000 USD loss that will be posted in the accounting entry. And in case the intercompany transfer is happening without a revenue, which means the receiving company code is not paying anything for this asset, in this case all the net book value of the asset will be posted against the asset disposal loss, so the financial entry will be the same but without the affiliate company clearing account. Now let's move to the receiving company code AJ30. To understand the accounting entries that will be posted there and the asset valuation in the receiving company code, we have to understand the difference between the transfer methods. There are mainly 3 different transfer methods available in SAP and also from business process point of view. The first one is the gross method, second is the net method, and third is the new value method. In the gross method, we move both the historical acquisition cost of the asset and the accumulated depreciation balance to the receiving company code. So in our example, if we use the gross method, the accounting entry in AJ30, the receiving company code, will be a debit to the acquisition cost of the asset or the reconciliation account of our fixed asset for 10,000 USD. This is the historical cost that the sending company code paid to acquisition the asset. So 10,000 USD, and then we will have a credit to the accumulated depreciation for 3,000 USD, and the difference will be posted to the asset acquisition clearing account. So this is similar to asset acquisition against automatic clearing account process. And as you see here, the valuation of the asset in the new company code, in the receiving company code AJ30, will be 10,000, which is the acquisition value, minus the accumulated depreciation of 3,000. So the net book value currently is 7,000, but in the receiving company code, we can see what is the accumulated depreciation posted so far, and we can see the original acquisition value. This is the growth method. In the net method, we only move the net book value of the asset to the receiving company code. So if you look in the sending company code AJ20, the net book value when we did the transfer was equal to 10,000, the acquisition cost, minus the accumulated depreciation 3,000. So the net value is 7,000. Now in the receiving company code, we will post an entry of debit to the asset acquisition cost or the asset reconciliation account for 7,000 and the credit to the asset acquisition clearing account for 7,000. The history of the accumulated depreciation and the history of the original acquisition cost is not moved to the receiving company code. So this depends on the business requirement. This is called the net method. As you see in both the gross and the net transfer methods, we completely ignored the value that we actually paid to buy the asset from AJ20. So AJ30 paid 5,000, right, to buy the asset from AJ20. But as you see in the gross and net methods, we completely ignored this. The asset is being valued in the receiving company code based on the value of the asset in the sending company code, not based on what they actually paid. We are not doing a new value to the asset. We are just transferring the existing value. But if we want to reevaluate the asset based on the amount that we are paying to the sending company code, then we use the third method, the new value method. In the new value method, we will ignore completely what was the value of the asset in the sending company code, and we will evaluate it in the receiving company code based on the amount that we paid for the asset. So in our example, AJ30, the receiving company code, is paying 5,000 USD to the sending company code to transfer this asset. So this is the value of the asset in our books because we paid 5,000 for it. So in our accounting entry, it will be a debit to the acquisition cost of the asset for 5,000. This is the value we paid, and a credit to the asset acquisition clearing account for 5,000. And we ignore completely what was the value of the asset in the sending company code. So these are the 3 different transfer methods: gross, net, and the new value. Now we understand the difference between them and the impact on the accounting entry and on the valuation of the asset in the receiving company code. The second point we need to understand for automatic intercompany transfer in SAP is something called the relationship type. This is the relation between the sending and the receiving company code. And here we have two relations. The first one is when the two company codes are assigned to the same company, and the second if the two company codes are assigned to two different companies or not assigned to companies at all. First, let me give you a quick reminder on the difference between company and the company code. A company code is our legal entity. This is the entity that is registered. It has commercial registration, tax registration, and we have to generate financial statements and tax reports for this company code. This is the legal entity. While the company is the group. We generate consolidated financial statements on the level of the company. So we can assign different company codes to the same company and then generate consolidated financial statements for all the company, including the company codes. And the assignment of a company code to a company is not mandatory. If we are using consolidation, we do the assignment. If we don't use consolidation, then we don't need to assign the company code. If the two company codes are assigned to the same company, then from the point of view of the fixed asset intercompany transfer configuration, they are considered as one legal unit. So this is the first relationship we have, one legal unit if the two company codes are assigned to the same company. While if the two company codes are assigned to two different companies, then they are considered as legally independent units. Also the same if any of the company codes is not assigned to a company at all, they are also considered as legally independent units. Based on the relationship types, we assign the transfer method and the asset transaction types we want to use when we process the automatic intercompany transfer. And we do this in something called the transfer variant. So in the transfer variant, we assign a relationship type to a transfer method and asset transaction types for retirement and acquisition. And this is it. Now we understand the difference between the manual fixed asset intercompany transfer process and the automatic process. You also understand the meaning of relationship type, transfer method, transfer variant, and you understand the different accounting entries included in the process. Now you are ready to go into SAP and start checking the configuration screens and run a test process. This is what I will do in the next video. Don't forget to check the SAP help library and try to watch this video while reading the library. So use both of them. This will give you great knowledge on the process. I hope you found this video useful and easy to understand. Don't forget to subscribe to the channel, follow the list of the playlists. I will be posting the other video for the demo and the configuration soon. Also, if you are an Elite member, you can check the configuration manual for fixed assets in the Elite documents library. I already updated the document with the needed configuration steps for intercompany asset transfer. Also, don't forget to leave me your comments. Let me know if you want me to add anything else into this process and also what else you want to see in the fixed asset playlist. Thank you for watching and I'll see you again soon.